Welcome to the Adapter's Advantage, the podcast that shares insider stories about breakthrough moments that lead to success. Get ready for an inspiring conversation about adapting to change from Allego, the all-in-one sales enablement platform built for success in a hybrid world. Let's dive right in.
Hi, this is Mark Magnacca, and I want to welcome you to the next episode of the Adapter's Advantage podcast. Today, my guest is Brian Shortsleeve. Before we jump right in, I want to give you some background on Brian because it's really quite an interesting and varied background that we're going to be covering in this interview. And I think a number of different things you're going to be able to pull out for benefit of your business. So Brian's passionate about helping founders and CEOs rapidly scale their companies. He works closely with management teams to drive growth through sales and go-to-market expansion and execution of strategic acquisitions. Prior to founding M33, Brian served as the chief administrator and acting general manager of the MBTA. And for those of you outside of Massachusetts, that's the Massachusetts Bay Transportation Authority, or the train system, if you will, around Boston. He was handpicked by Governor Charlie Baker in 2015 to develop and execute a plan to put the MBTA on the path to long-term fiscal sustainability. And during his tenure, Brian worked closely with the MBTA Fiscal and Management Control Board. He led efforts to balance the operating budget, modernize internal businesses, and rapidly accelerate the pace of capital investment in critical systems repairs and build the team and plan that led to this really well-documented turnaround in what was called the Green Line Extension Project. Brian, so much to talk about. Welcome to the podcast.
Well, Mark, thanks for having me on this morning. I'm looking forward to it.
So let's begin with this question, Brian. There's a lot of different things that you do in your current role as a co-founder of M33 Growth. When you meet people for the first time and they say, so what do you do? How do you answer that question?
What we do is very specific, and we're extremely focused as a firm. We work with small software companies, generally bootstrapped companies, and help them rapidly accelerate their growth, generally through a combination of investing in sales and go-to-market, but also through really aggressive M&A and strategic acquisitions.
So that's very clear. It's different. And what we're going to get into a little bit is kind of what led you to that and why that matters. And one of the things I'm very interested to talk to you about is what the results have been of focusing on this sub-market, if you will, within kind of the broader software space. Mm-hmm. But before we do that, Brian, I noted when we started, you were on the call 1 minute before. And I was reminded of the fact that you were a captain in the Marine Corps. So one of my questions for you is, what did you learn in your role as a captain that's been most relevant to your work with entrepreneurs?
And I think the management techniques, the leadership techniques that have been most helpful to me from the Marine Corps in driving success with our companies has been number one, having a bias for action. You know, as a Marine officer, you are trained to have a bias for action, for making decisions with often incomplete information. So that a bias for action is critical. You're also taught to always stay on offense. Our companies are very aggressive. They don't sit back. Our goal for our companies is that they generate organic growth north of 30% a year, and that they also complete at least one acquisition per year. Some of our companies will complete 2 or 3, but I think staying on offense in our markets is critical. And then the final thing you really learn as a Marine officer is to stay flexible. The official motto of the Marine Corps is Semper Fidelis, which means always faithful. But the unofficial motto of the Marine Corps for those who have served is Semper Gumby, which means always flexible. Businesses change, conditions change. You have to be always ready for what's around the corner. And I do think in the world of small, high growth software businesses, that approach that I learned in the Marine Corps, and certainly, is successful in the Marine Corps, is really critical for leaders of companies of our size.
So let's talk about this pivot that you had. You come out of school and you go into the Marine Corps, and I know you got into the venture capital side of the business after doing some consulting. But what was the shift, if you would, to take you from the private sector to getting tapped on the shoulder to move into a totally different world, which was the public sector?
Well, it wasn't something I ever planned to do. I've always had a real passion for public service, and I had the real honor of working with Charlie Baker at General Catalyst Partners in Cambridge from 2011 until he became governor in 2014. He was an executive in residence at General Catalyst. I got a chance to see him in action. We invested in companies with him. He played a leadership role in a lot of our healthcare investments. I always told him that one day I hoped he would be governor. And if he did become governor, that I'd be, willing and interested in trying to help him out if he got himself in a jam. So when the MBTA imploded in the winter of 2015, which many of your listeners will remember, that was Snowmageddon, as we called it then. There was over 100 inches of snow, which fell between February 11th, I believe, and about February 28th. During that period, the temperature never got above 20 degrees, and the MBTA, it failed in pretty spectacular fashion. What was obvious to folks looking at the T at that point were the operational issues. It was clear the trains weren't running. But the spring of 2015, an independent panel took a look at the T and really identified some deeper financial issues in the organization that needed to be solved. In particular, kind of an unsustainably growing operating deficit. The MBTA hadn't balanced its budget in more than a decade. And there was a fiscal management control board created with a new position called the chief administrator. And the role of that position was to develop and execute a plan to deliver a balanced budget at the MBTA and put the organization on the path to fiscal stability, which meant controlling cost and driving revenue. So that's the role that Governor Baker asked me to fill, and I agreed to do it, and spent 2 years on that project between the summer of 2015 and the summer of 2017.
So Brian, let me ask, what was the biggest surprise you had as a Marine captain, who's been in the private sector? You're sort of this make it happen, get things done environment that you're used to. What happened, and what was the big surprise for you at being on kind of the other side of the fence?
My first experience in the business world after finishing up my time in the Marine Corps, I attended Harvard Business School. Then I went to work for Bain Consulting. So I have always brought to our companies a real analytical approach around financial metrics and operating metrics. I think the biggest surprise for me running a public agency was the lack of experience that the leadership of the agency had in using financial metrics to make decisions. I brought to the table an approach around monthly closes of the financials, which is something the MBTA had never done. We kicked off for the first time monthly budget reviews, where we went through with every one of the 39 internal departments, every single element of cost and what was happening. And that was brand new for the organization. I mean, this was a $2 billion operating organization in which they weren't closing the books monthly. They weren't reviewing numbers on a real-time basis. And as a result, costs were growing at about 3 times the rate of revenue. The good news is when you do bring a financial orientation into the organization, public or private, you can have fairly, dramatic impacts quickly. It took us about 2 years to deliver a balanced budget for the MBTA. We did it in 2018. And over that period, we focused on growing our cost base at no more than our rate of ridership growth, which is about 1%. The result of that was that the organization slowly balanced its budget. So I would say that bringing an orientation towards using financial data to make decisions was the most important lens I brought to the organization. And my biggest surprise was that the organization had never had monthly closes, monthly budget meetings, or really looked at financial information in a granular way.
So Brian, there's a lot there. There's a lot in what you just said. First of all, it's a great example, not just for multi-billion-dollar organizations, but when you're not accountable and you're deficit spending, right, which can happen to anyone in kind of a temporary basis. But
Sure.
if the culture is, it doesn't really matter, right? I.e. the Soviet Union or other, other behemoths of the past, pretty soon, a culture develops like no one cares. So just putting attention on it in and of itself, I find that piece intriguing. But the connection many people might not realize, I know that in our industry, Brian, just in the world of sales enablement, we have competitors who've literally spent 10 times more money than we have to
Mhm.
get to the same revenue that we've gotten to.
Right,
10x.
right.
That's a lot of money,
Mhm.
right? And so sometimes when you just have a lot of money sloshing around, it leads to the same kind of lack of discipline that you just
Mhm.
described, and not paying attention to things the same way you do, um, as when you're really carefully watching it every single month.
I think sunshine is always, the best disinfectant. And I found that sitting every month with every department head, looking at every number, and really focusing on controlling cost growth while expanding service and delivering the best service we could for our riders had an amazing effect. And by the way, we do the same thing in our companies. We do something called zero-based budgeting, which is every year, let's start from scratch.
Yep.
What do we need to spend to deliver great software for our customers? And let's always be reevaluating that, because costs only move one direction if they're not managed, right? I mean, the flywheel of cost always goes up and to the right if you're not looking at it. If you're focused on it and you're holding people accountable, and as a leader, you're talking about it. I mean, we had over 100 budget meetings at the MBTA in 2015 and 16 with not only our executive team, with our stakeholders, with our 17 unions. And we brief them every month and every quarter on how is this organization doing in terms of trending towards a balanced budget that'll put us on a sustainable fiscal path. And that level of focus and transparency in any organization, public or private, I think can often drive kind of miraculous results financially, because often organizations are spending a lot of money. There's a lot of input for things that do not have much output. And those
Right.
are the areas generally of opportunity to say, what if we stopped doing this? Would anyone notice? Would our customers notice? Would we deliver a better service? Or are we simply doing this activity because we've always done it that way?
Yeah. That's a great question that needs to be asked. And I know not every person that you interact with receives the message you've just delivered well. Some people are open to it, but there's this notion of the growth mindset and the fixed mindset. It's very easy to persevere in a fixed mindset when you're in kind of the deficit spending mode.
Mhm.
So, when I think about the common denominators of what you've seen from your consulting days, what you've seen from your military days, and then from your venture capital days, if you had to boil it down, what are some of the biggest common denominators you look for in the people that you invest in?
Well, if you look at our founders, our CEOs, these are individuals who have bootstrapped their companies. They have not built their companies with institutional venture capital. Generally, when we meet them, they're at 5 million or greater in revenue, which probably means they have 40 or 50 customers. So what I would say is the characteristic that defines them, because generally these are all B2B vertical market leaders.
Yep.
Our founders have deep domain experience. These
Mhm.
are seasoned domain experts that have written a piece of software, developed a piece of software, maybe with an outside partner, created a piece of software to solve a very specific business problem in their vertical. This is not tech geeks gone wild. These are
Right.
seasoned domain experts that are solving a very specific business problem in a vertical. For example, Titan Cloud Software in Nashville, Tennessee, has built the only multi-tenant, enterprise-wide underground storage tank compliance platform for large convenience stores. That is a niche space, but no one in the world has thought about that problem as long as they haven't built a piece of software. So number one, I'd say deep domain experience. Number two, I think our founders have an intuitive sense of exactly what their customers need and what they need to deliver to customers to have both pricing power and great retention. If
Yep.
you're funding your growth through the next customer you sign up versus through venture capital, the unit economics really matter.
Yeah.
And I think with our founders, they intuitively have a sense of exactly what those customers need and how they can deliver something that's got 95+% retention, and hopefully on an annual basis, is kind of 6 to 8 points of pricing power plus the ability to upsell. So I think the unit economics focus on these businesses, because they're profitable or break even, is critical. And then the other element I would say that flows through all of our founders, whether they're in the convenience store vertical or the midstream ERP oil and gas vertical or the mortgage technology vertical, is they have a maniacal desire to win. They are relentless about winning in their markets. Part of the reason for that is almost by definition, our companies are the Davids fighting against the Goliaths. Every one of our companies is the $5 to $7 million ARR young up-and-comer competing against the 800-pound gorilla in their industry. Sometimes there are 2 or 3 800-pound gorillas.
Yep.
So our founders are the small upstarts with the slingshot, just dying to take out Goliath, and we try to help them do it.
Brian, as you're saying it, I have to tell you that what's really remarkable to me, having been through this process, I know my co-founder knew what you're talking about with respect to unit economics, and he was explaining to me, it was almost like, and this may be relevant to some of your founders as well. My co-founder, Yu-Chun Lee, it was as if he was dropping breadcrumbs for me,
right?
Because I could only absorb so much information. When he said to me, no, you're going to be, we're going to be funding growth with new customers, and this next customer is going to help fund the next piece of growth. It was hard for me to really understand that, but it turns out it made all the difference in the world to the bottom line and to not needing to take venture capital money prematurely.
And it also means that you build a very sustainable and often superior business operating model. I mean, the beauty of founders that build one customer at a time and just intuitively know, well, every 4th or 5th customer sign up, I can kind of hire another person, right? That's kind of the way they scale them up. What you find at scale is that even though they might only be in the $5 to $7 million revenue range, they're running in mid-80s gross margins, and they're profitable. There's many businesses we see that have grown up with a lot of venture capital financing that don't have those unit economics because the structural foundation, the core operating model from the beginning, wasn't set up that way. And those are hard things to change. So I think our founder businesses, even as they get to scale, I think have superior economics often because of the way they have bootstrapped themselves.
So Brian, is it fair to say that generally speaking, there aren't many hired guns at the stage that you are interacting with founders, that they're either the CEO or the president, or they're effectively running the company?
Yeah, generally, in our case, we are backing an existing founder. We're providing liquidity so that he or she can take care of their family. We're providing growth capital, but generally that founder we're backing. Often we're augmenting them with professional management. A lot of bootstrap companies that are founder-led are going to be led by a founder who's either kind of comes from a product background or probably a sales background, one or the other.
Right.
And rarely have they invested in internal functions like finance, FP&A, HR. So we often augment there, and we often also bring in a professional head of sales or CRO. Because our companies are vertical market leaders led by domain experts, often they have scaled because they're very well known in their vertical and people call them, and that's how they generate revenue. And they generally haven't built a big, expensive outbound sales force. And what we do with them is we bring in a CRO, we bring in enterprise reps, we develop inside sales, we get them up on HubSpot or Marketo, we use Salesforce, and we build that. But at core, we're always building around that strong founder who's got a very clear sense of how they want to drive growth in their business, and we're going to help them do it.
And I'm curious, how much of your value proposition is being able to have a very, I'll call it a personal connection with you and the rest of your team versus in some firms sort of, would have a giant portfolio. You're like 3 levels down with a junior partner kind of managing the account, so to speak.
We are a focused factory. I founded this firm, and we have built this firm to focus on the smaller companies coming up. And what that means, it's a very concentrated portfolio. We're going to invest in 7 or 8 founders in each of our funds. And me personally, Mike Anello, Gabe Ling, my partners and co-founders are going to be very deeply involved with each of these companies. I'm a big believer when you talk to a founder, who's never taken outside capital, that decision to take outside capital is a really big one. It's a very personal one. And often there are family dynamics. I mean, bootstrap companies are often run by father-daughter teams or brother-sister teams or father-son teams or grandfather-nephew teams. I mean, when you're bootstrapping a business without outside resource, often there's a family dynamic. So often, in our business, when we think about partnering with these companies, they're inviting you into their family. And we're probably 80% family psychiatrist and 20% high financier at that point.
Brian, I want to just step back for a minute here. And I'm thinking about this journey that you've been on. And I'm thinking about all of the different skill sets. We call this the adapter's advantage. And so many people that I get to talk about sort of this processional effect of how they learned one thing and then they learned something else. And they're really lifelong learners. And when you think about the journey that you've been on, what would you say has been the most important skill that you've learned that's really serving you now in this current role?
I think the most important skill is empathy and an ability to connect with founders at their level and understand their problems, because at the end of the day, we are in the business of helping them scale. We are trying to partner with founders that have never taken capital. And unless I can understand the problem they're trying to solve and show them how we can help them, I won't be successful. So another way to say that is it's really that sales ability. I mean, we are in our business, it's the ultimate enterprise long-term sale. We have to convince a founder or a family that has been in business for 10 years and is running a wildly profitable growing business to take outside capital. That's a hard sell. But I would say what has been most important in my career, and certainly what we focus on with our sourcing team, is the ability to connect with those people, the ability to sell them on the way that we can help. And that comes down to being a really good listener, understanding the problems they're trying to solve, which often are not financial. Often they're other things. My dad owns 40% of the business. He doesn't want to go do acquisitions and scale. I want to grow like crazy because I'm 35. My dad's 65 and wants to retire. Can you help me solve that problem? Oh, we can help you solve that problem. But I think for me, there are a lot of growth equity and venture capital and private equity funds out there that are continually calling on the kind of companies we call on. When I'm in front of a founder, I'm really focused on understanding the problem they're trying to solve and selling our ability to solve it. And if you can do that successfully in our part of the business, I think you can find great companies. And that's the most important skill for what we do. And it's the most important skill we try to teach our young people from the sourcing standpoint.
It turns out that skill transcends so many different elements and so many job descriptions today. It's not just Brene Brown talking about this topic, but in the final analysis, whether it's with your doctor, whether it's with any professional, whether it's in the business of selling software, the ability to truly have empathy for what is the problem at hand here, and quite frankly, am I qualified to help you to solve it, right? So it's really good to hear that this trend is making it to the venture capital business. And, I'll bet there'll be some of your Marine buddies who would be surprised to hear that, Brian said empathy is one of the most important things, right? So I will tell you, I love the story of M33. So can you just remind people the origin of this name?
Well, when we were putting the firm together, Gabling, Mike Anello, and I, we had all worked together at General Catalyst. At General Catalyst, we had focused on these small, high-growth bootstrap businesses, and we always kind of talked with our companies about reaching escape velocity, right? When you're a small business with great customer relationships and great retention, the risk usually isn't that you're going to go out of business. Most of them don't. They're unlevered, they're profitable. The risk is that 5 years later, they're still a small business. Right. So how do you reach escape velocity? How do you get from the $5 million revenue business to the $20 million revenue business? That's reaching escape velocity, getting to scale. So when we founded M33, we thought a lot about reaching escape velocity. Mach 33 is a physics term. That is the speed at which an object escapes the gravitational pull of the Earth. So we founded the firm calling it Mach 33. And then when I ran it by my wife, she thought it sounded like a Gillette razor blade.
I think she was right.
She was probably right. She usually is. And she suggested we drop the Mach and call it M33, and M33 Growth was born. But the concept's the same. We're helping small companies reach escape velocity and become big companies.
It's a great metaphor, Brian. And in fact, just sometimes, the subversive element in marketing is by dropping something, it creates the opening to ask, what does that mean? And I'm a big believer in that concept. I know I've experienced it at different levels. It's almost like in physics, there's only one escape velocity, but what I've seen is as you move along the path, there's the same gravitational pull that holds you down. You have to break through it, and then you get to another one, and then there's another set of inertia that forms like a different type of gravitational pull.
Right.
You got to break through that one. So it's a good concept to be thinking about. And when you play this out, though, what has been the biggest difference between the firms who achieve escape velocity? They basically break out of the category or the class and become the leader.
I would say that it is that maniacal desire to win and that relentless focus on leaning forward. For example, doing acquisitions are hard. Integrating companies are hard. Our companies are generally small, and they're acquiring smaller companies. We have businesses that have completed 3 acquisitions in a year, tripled their size. That takes a lot of work, and it takes a lot of really leaning forward, because again, you're always making decisions with incomplete information. But I'd say the companies that do break out are the companies that have that bias for action, have that bias to take the risk. Let's go for it. Let's not hang back. Let's not be complacent. And they really want to win. Every one of them generally is competing against a big player in their space who they really want to beat. And I would say, organic growth is critical. It's really important what we do. But if you can combine organic growth with acquisitions, you can find yourself with businesses that are 3, 4, 5 times larger over the course of 3 years than they were when they started. But that takes a tremendous amount of hunger, of desire, of 100-hour weeks, and a real passion for winning versus kind of hanging back and coasting. Our founders that are successful are the ones that wake up every day and just want to go for it.
I think I may know what you're going to say to this one, but I'm going to ask the question anyway. My last question for you, I always like to ask about what's the most important skill that you think entrepreneurs need to learn or to improve. So the most important skill, we've talked a lot here about the decision-making ability, and which of course is a skill in of itself, but what do you believe? Is it that, or is it something else in terms of the most important skill that you believe founders need to learn or improve?
I would say it's flexibility and an ability to change your mind or your course when the facts change. Markets don't stand still. Markets move fast. Your competitors move fast. Things happen. So I think our most successful entrepreneurs are able to flex and to pivot as they need to, because very rarely, if you look back on the preceding year and you grab the board book from December of 2020 and you say, hey, here's all the things we thought were going to happen in 2021. Hey, what happened? What you find is none of that stuff happened, but 5 other things happened. And the real question is how fast can you pivot? How flexible are you? And how quickly can you adapt yourself to changing market conditions? There was a major economic shock in March of 2020 that turned upside down many plans, strategies of many companies in software. But there was a lot of winners in that time that pivoted to very quickly, adapt and deliver customers what they needed. So what I would say to any founder running a high growth business is most of the things you think will happen next year won't, and a lot of stuff you don't think will happen will, and you're going to be successful to the extent you can continually be pivoting and kind of changing your opinion and your path based on the facts and based on what's happening in your market.
I heard what you just said put well by a member of my management team who said, as he pounded his fist in a meeting, he said, "I'm putting a stake in the ground, but it's in sand." So that's kind of that's the idea.
Semper Gumby. Always
Semper
flexible.
Gumby, man. Semper
Always
Gumby.
flexible.
That's it. No, I think that's going to be the escape velocity and Semper Gumby are going to be the
Gumby. Yeah,
touchstones.
Gumby, like a Gumby bear. Semper Gumby.
Semper Gumby. I didn't realize that's a.
Yeah, Semper Gumby. Think of a gummy bear. That's how flexible you've got to be in the kind of markets we play in.
I love it. Well, Brian, listen, this has been a real pleasure. It's been great to get to know more about your story, to learn more about M33 Growth and this really unique approach to the market that you have. For people who want to learn more about the firm or more about you, what's the best way to do that?
Well, please check out our website, which is m33growth.com. Check us out on LinkedIn. Ping me an email anytime. My email's on there. We love talking to founders and helping them solve the problems they're facing. And Mark, I want to thank you. It's a great podcast. I love listening. I hope your viewers find this interesting, and I hope everyone listening has an awesome 2022 and continues along the entrepreneur's path.
Brian, a real pleasure chatting with you. More to come on this. I definitely look forward to continuing your conversation and hope to be able to collaborate any way that we can help support your entrepreneurs in the portfolio companies. Happy to do that.
Thanks, Mark. I really appreciate it. Enjoyed the conversation.
You've been listening to The Adapter's Advantage, a podcast from Allego. Stay connected by subscribing to the show at allego.com/podcast, leaving us a rating and comment, and sharing episodes you love. That helps us bring you more conversations about breakthrough moments that lead to success. Thanks for listening. Until next time, remember that one new idea can change your life.